Welcome, investors and financial enthusiasts. Today, we're diving into the promising world of small-cap ETFs. Let's set the stage. Exchange-traded funds, or ETFs, are like a mixed bag of various stocks, bonds, or commodities. They are designed to track the performance of a specific index and are traded on the stock exchange, just like individual stocks. Now, within this universe of ETFs, we find a category that's often overlooked, but has a great potential for high growth. The small-cap ETFs. Small-cap ETFs primarily invest in companies with a market capitalization of between $300 million and $2 billion. These companies might not be the big names you see in the headlines every day, but they hold an untapped potential for growth. They are like the agile sprinters in the marathon of market investments, capable of quick spurts of growth that can yield significant returns. However, like all investments, small-cap ETFs come with their own set of risks. These companies are often more vulnerable to market volatility and economic downturns, but with the right strategy and a balanced portfolio, these risks can be mitigated. In today's discussion, we'll be focusing on 3 small-cap ETFs that have caught the eye of savvy investors. First, we have XSMO, a nimble performer that's been making waves in the small-cap arena. Next, we'll discuss IWM, a tried-and-true veteran in the small-cap sector. And finally, we'll shine a light on AVUV, an underdog champion that's been steadily gaining ground. Each of these ETFs has its own unique strengths and strategies, and we'll delve into what makes them stand out in the competitive world of small-cap investments. So, buckle up as we embark on this exciting journey into the world of small-cap ETFs. Whether you're a seasoned investor or just starting out, there's always something new to learn and discover. Join us as we explore the top 3 small-cap ETFs for 2025, XSMO, IWM, and AVUV. Thanks for tuning in, viewers. If you're finding this content valuable, there's so much more to come, filled with even more amazing tips, tricks, and inspiration. Make sure you hit that subscribe button to stay connected with us and never miss out. And while you're at it, drop a comment below and share this video with your friends. Well, first on our list is XSMO, an ETF known for its agility and performance. Let's delve deeper into the world of XSMO, a small-cap exchange-traded fund that's been turning heads in the financial realm. XSMO is a dynamic player in the ETF landscape, a testament to its agility and performance, making it a significant player in the small-cap space. Diving right into the performance history of XSMO, it's been a showcase of consistent growth and resilience. Over the past few years, XSMO has demonstrated a strong performance trajectory. It has consistently outperformed its benchmarks, and even in volatile market conditions, it has shown a remarkable ability to bounce back, proving its resilience time and again. But what is it that fuels XSMO's performance? A glance at its holdings reveals a diversified portfolio that spans across various sectors. This ETF has a broad exposure to a range of industries, from technology and healthcare to consumer discretionary and financials. Its diverse holdings serve as a buffer against market volatility, allowing it to weather the storm and emerge stronger. Moreover, XSMO's sector allocations are a testament to its strategic approach. The fund's management team diligently rebalances the portfolio to ensure optimal sector representation. This strategic allocation, coupled with a careful selection of high-potential small-cap stocks, contributes to XSMO's robust performance. Of course, as with any investment, XSMO comes with its own set of potential risks. The inherent volatility of small-cap stocks may lead to larger price swings, and the fund's broad sector exposure means it's susceptible to downtrends in any of these sectors. However, XSMO's diversified portfolio and strategic sector allocations act as mitigating factors, cushioning the impact of these risks. But let's not overlook XSMO's strengths. Its agility allows it to adapt to evolving market conditions swiftly, and its diversified portfolio provides a level of stability. Furthermore, its consistent performance history serves as a testament to its growth potential. In essence, XSMO is like a nimble boxer in the ring, darting and weaving, landing strategic punches, and absorbing blows with grace. It's agile, resilient, and strategic, making it a compelling choice for investors seeking exposure to the small-cap space. So, should you add XSMO to your investment portfolio? That's a question only you can answer. But remember, investing is all about diversification and balance, and XSMO, with its agility and performance, certainly adds a unique flavor to the mix. XSMO has demonstrated its resilience and growth potential, making it a strong contender in the small cap space. As we move forward, we'll continue to explore the other promising small cap ETFs and see how they stack up against XSMO. But for now, XSMO certainly makes a compelling case for itself. Next, we turn our attention to IWM, a reliable veteran in the small cap market. The IWM, or the iShares Russell 2000 ETF, has been a steadfast player in the small cap arena for over 2 decades. Since its inception in the year 2000, IWM has consistently provided investors with exposure to a broad range of U.S. small cap stocks, making it a tried and true option for those seeking to diversify their portfolios. IWM's long-standing presence in the market is a testament to its robustness and adaptability. It has weathered market storms and economic downturns, proving time and again its resilience. This resilience is largely due to its diversified holdings. IWM is composed of approximately 2,000 small-cap companies spread across a wide array of sectors. This broad-based approach reduces the risk associated with any single company or industry. The fund's performance history is another testament to its reliability. Over the past decade, IWM has generated steady returns, outperforming many of its peers in the small-cap sector. While past performance is not a guarantee of future results, IWM's track record offers a degree of confidence that few other funds can match. But what exactly does IWM invest in? The fund's holdings are diverse, spanning sectors from healthcare to technology, from financial services to consumer discretionary. This breadth of sector allocation allows IWM to benefit from growth across the economy, adding to its stability. Despite its many strengths, it's essential to remember that investing in IWM, like all investments, carries potential risks. Small-cap stocks can be more volatile than their large-cap counterparts. They can also be more sensitive to economic conditions, meaning they may be hit harder during economic downturns. However, IWM's broad diversification helps mitigate these risks. While IWM may not be the most exciting or flashy fund, it offers something arguably more valuable: reliability. It's the tortoise in the race, steadily plodding along, outlasting many of its more volatile peers. It's the fund you can count on to be there, year in, year out, providing consistent exposure to the small-cap market. Investors who value stability and long-term growth may find IWM to be a compelling choice. It's a fund that doesn't promise overnight riches but offers the potential for steady, reliable returns over time. It's a fund that stood the test of time and continues to hold its own in the ever-changing landscape of the small-cap market. For those who value stability and reliability, IWM holds a solid position in the small-cap arena. Finally, we have AVUV, a less-known but formidable player in the small-cap market. The name AVUV may not ring a bell to many, but don't let its under-the-radar status fool you. This ETF has been quietly rising through the ranks and making a name for itself. Despite its relative obscurity, AVUV has been delivering impressive performance that can compete with, and often outshine, its more popular counterparts. What makes AVUV stand out is its unique approach. Unlike traditional ETFs that follow market cap-weighted indices, AVUV tracks an index that weighs stocks based on factors like size, value, and profitability. This unique methodology has resulted in a portfolio that's quite different from your typical small-cap fund. Diving deeper into AVUV's holdings, you'll find an eclectic mix of sectors. It's not just tech-heavy like many of its peers. Instead, AVUV has substantial allocations in sectors such as financials, industrials, and healthcare, offering a well-diversified portfolio. It's this broad exposure that has allowed AVUV to capture growth across various sectors, not just riding the wave of a single booming industry. But let's talk numbers. Over the past few years, AVUV has consistently outperformed the broader small-cap market. Its annualized returns have been nothing short of remarkable, often surpassing those of its better-known counterparts. And while past performance is no guarantee of future results, AVUV's track record certainly paints a promising picture. Now, as with any investment, AVUV isn't without its risks. The ETF's unique methodology means it often holds less liquid stocks, which could lead to higher trading costs. Plus, its broad sector exposure could make it more susceptible to downturns in any one industry. However, it's worth noting that these risks are inherent in most small-cap funds, not just AVUV, but here's where the Underdog story really shines. Despite these potential challenges, AVUV has proven its resilience time and again. It has managed to navigate market volatility and sector downturns, continually delivering strong returns. It's this ability to weather the storm that has earned AVUV its Underdog Champion title. So if you're an investor looking for a less-known but high-performing small-cap fund, AVUV should definitely be on your radar. Its unique approach, diversified portfolio, and impressive track record make it a compelling option. Just remember that like any investment, it comes with its own set of risks. AVUV, the Underdog Champion, has shown that it can deliver impressive growth, making it an interesting option for investors. So don't be quick to overlook the underdogs. Sometimes they're the ones who end up leading the pack. Now that we've looked at each ETF individually, let's see how they stack up against each other. In the world of small-cap ETFs, XSMO, IWM, and AVUV each have their unique characteristics and potential advantages. Let's dive a bit deeper and see how they compare and contrast in terms of performance, risk factors, and potential returns. Starting with performance, XSMO, the Agile performer, has shown impressive agility in adjusting to market trends. It has a track record of outperforming many of its peers in the small-cap space, making it a strong contender for those seeking an active investment strategy. IWM, the reliable veteran on the other hand, has been a steady performer over the years. It has consistently delivered solid returns, proving its reliability in the face of market volatility. This makes it a safe bet for investors seeking steady growth over time. AVUV, the Underdog Champion, has shown an ability to punch above its weight. Despite being relatively new to the scene, it has demonstrated strong performance, often outpacing more established funds. This could make it an attractive option for those willing to take on a bit more risk for potentially higher returns. Moving on to risk factors, each of these ETFs presents a unique set of challenges. With XSMO, the risk lies in its agility. While it can quickly adapt to market trends, if the market takes an unexpected turn, it may take a hit. IWM's risk lies in its size. As a larger fund, it may be slower to react to market changes, potentially affecting its performance. AVUV, meanwhile, is a smaller fund, which means it may be more susceptible to market volatility. However, its focus on value stocks could help mitigate this risk. Lastly, let's consider potential returns. XSMO, with its agile approach, has the potential for high returns, particularly in a bullish market. IWM, with its steady performance, offers the prospect of consistent, reliable returns over time. AVUV, with its focus on value stocks, presents an opportunity for substantial returns, particularly if these undervalued companies realize their potential. In conclusion, each of these ETFs offers a unique combination of performance, risk, and return potential. XSMO is a strong choice for those seeking an active, agile investment strategy. IWM is a good fit for those looking for steady, reliable returns. And AVUV is a compelling option for those willing to take on a bit more risk in exchange for potentially higher returns. As we can see, each ETF has its own strengths and potential drawbacks. The choice depends on your investment goals and risk tolerance. So there you have it, the top 3 small-cap ETFs for 2025, XSMO, IWM, and AVUV. Each of these funds presents a unique opportunity for savvy investors. XSMO, the agile performer with its focus on innovative companies that are nimble and quick to adapt. IWM, the reliable veteran, which has consistently demonstrated its strength and stability over time. And last but not least, AVUV, the Underdog Champion, proving that sometimes the most underestimated players can surprise us all. These 3 ETFs represent a diverse range of investment opportunities within the small-cap space. But remember, as with any investment, it's essential to do your own research and consider your individual financial goals and risk tolerance. Before you leave, please subscribe, like, and share this video with your fellow investors. Stay tuned for more insightful investment advice. Thank you for watching.